Hey guys, welcome back to the After Hours. I'm the A-Tail Beast, and today we're going to talk about simple and experience. When I talk about what happened this week in the market, you have to understand that there are a lot of bounce shorts that happen in this month. And so here's at least 8 tickers that you could have traded this month to make some money. Now, the most recent one we had was NASS. Before that was SNTG. And that's only after we saw a little bit of VVPR and KOSS. Now, towards the beginning of this month, we really had to hammer it on DTSS and RDZN. Now, when we look at this list of tickers, we understand that each of them is an opportunity. There are some low floats. Now, these low floats, they normally have a lot of volatility, and each level, no matter what price level we're talking about, is usually paper thin. But it is a little different when you have volume added to that price level. There's gonna be historic price action. There's gonna be things that happened yesterday. There's gonna be things that happen within a year, and it's all gonna affect what happens today. On these days, in the pre-market, or even the day before, we are looking for extension. We're looking for increasing amounts of volume, and we want that to all fall on top of itself. No matter what type of trader you are, what's really important is you have to understand risk management. This is going to lead the entire process. Even if you're a scalper, just trying to get a few cents or even a couple dollars here or there, it's still going to have the same fundamentals as a swing trader or a day trader. In all cases, all 3 of the categories are momentum traders. The only difference between a swing trader, a day trader, and a scalper is the time frame that they look at. And no matter what, when you are looking for confirmations of momentum as a momentum trader, you need a confirmation. It can happen from trading indicators, or it can come from other types of indicators. There's oscillators, there's momentum indicators, and there's some things that people even made up on Excel or in Python. What really matters is no matter what you do, it has to be scaled to the long term. Once it's scaled to the long term, it's considered edge. And whenever you have your edge in stocks, you want to put your personal rules on there, which gives you confidence that you're going to know how to risk manage every point of information that's introduced at every point in time. When it comes to momentum indicators, we can break this down to another step. We're pretty much looking for high volume matched with a relative time frame. That's all momentum trading is. High to me could be based off of the current day for this stock, which is probably around 30K. Well, if this starts hitting millions on one day or even throughout a whole week, I consider that high in a relative value. When I'm looking for this momentum, I can see maybe when it was trading around 30K, that was the bottom of the stock and it was going sideways in a consolidation. Well, from that bottom, we saw something happen, or literally nothing could have happened. We just know that volume entered this stock. People noticed that movement and then they joined in that movement. And at some point, it got to the top gainers. And once it went from the top gainers, we went Quaker style at that point. We're talking about the spirit of retail, the algorithms, everything went into this ticker. And then it had a life of its own. But just like every good party, it has to end. And that's where we go back to the place where it consolidated. At the end of the day, what really matters is that you know how to read the momentum. You have other indicators that you can use to overlap with your patterns and confirmation. When we look at confirmations, we have to understand confirmation is a technical term. And when we talk about technical, it's something that can be represented as a pattern or a number. And that's exactly what we do. We have rules that say our confirmation equals this amount of volume or this specific type of price action. We're talking about Japanese candlesticks. You can see something go from red to green or green to red. You can also have a certain type of candle, like each of the candles, depending on how it opens and closes, how far it goes up or comes down, or even the order at which it formed that candle. They can all be named different. And based off of the type of candle that you see, that could just be the start of the type of pattern that you can see on a smaller time frame. The reason this is important is because you have to define what is a confirmation for you. For me personally, I like to see a specific number of volume matched with a specific price action inside of the stock. Now, if I'm trying to top tick for whatever reason, whether it's a top tick in partial position or a top tick with a full position, my reference is usually around the resistance. At any point, I understand that things can fall faster or slower than I actually intend. So I understand that I can just focus on my risk management. But when I really want to micro control things and I'm still technically playing in my rules, I'll go down to the 1 minute chart. I'll put in however much position that I borrowed, whether it's a fraction or the whole thing. And I'm gonna look for specific price actions inside of the chart.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
If I see slow grinding, I expect the resistance not to hold. If I see a fast price actions and we're already overextended and then we hit the resistance like a wall, I expect there to be some resistance. I'm talking about 1 test or 2 tests, maybe even 3 tests. And you see this on a lower time frame in like the 1-minute chart. Now, when you do this, we understand that being in a low time frame, it has its pros and cons. In a lower time frame, there's a lot of false signals. Also, there is more anxiety. There's intensity. When you really want to lock in and micro control, pretty much feeding a desire that doesn't need to be in trading, we're talking about that gambling nature, or that adrenaline. We didn't come to the stock market to feel that. But if you did want to feel that, hypothetically, the 1-minute chart is where you find it. It's on those smaller time frames. Before we even talk about smaller time frames, what's more important is those larger time frames. Remember, everything starts on the daily time frame because that's how you spotted the pattern in the first place. Why I use the 1-minute time frame is usually if I'm investigating something and I need to look at the nitty-gritty details. So I make a hypothesis based off of what I observe on the 1-minute chart. We're talking about you can look at level 2 and you can see each individual route. From that route, you can have a decent guess. Was this a broker? Was this an algo? Was this just a bunch of traders that executed at the same time? Well, you can find that kind of information in the 1-minute candle. And if you find another online chat room or source that matches the same timing, that's where you match 2 separate pieces of information and you know that this guy did that trade, or this firm did that trade, or this guy's risk management for this stock only goes up to this point. And this is where he just pulled the plug. If you're a beginner, it's better for you to start on a higher time frame. We're talking about the daily charts, the larger tickers. But if you're still in the penny stocks where you're dealing with things under $10, you could be moving anywhere from a couple cents to a couple dollars in a few minutes to as little as a few seconds. And because of that, it's more important for you to see momentum entering and leaving the chart. When you're looking at penny stocks, the lower the price, the more you're going to see some kind of volatility, because when there's higher relative volume that you're matching with a time frame, you're looking for confirmations. If you're at the open inside of a stock market and you look at the first 5 minutes and you look at it with a 1-minute chart versus a 5-minute chart, you want to decide whether the stock is going to go up or is going to go down. If you look at the first minute and you see that it's green, that doesn't mean that the next hour or 30 minutes is going to be green, because the 1-minute chart can't be used to confirm a trend. But if you use the 5-minute chart, it's at least more valuable than if you use the 1-minute chart, because in that 1-minute chart, you might see something like 100K volume or even 500,000 volume. But if you're looking on that 5-minute chart, you can see something even crazier. You can see like 10 million volume, 20 million volume. The more volume you see in that one candle, even if it didn't move very much, you'll see that as a strong point. We're talking about a shifting point, but this is all relative. If those amounts of volume were on a stock that had hundreds or even billions of volume on a day, that doesn't mean anything. But if this is high in terms of 10 times or 1,000 times the normal volume that we'll see on that minute candle, that's saying there's a top coming, there's a bottom coming, or maybe there's some type of manipulation that's happening on this stock. If you're seeing a lot of volume go into a smaller time frame and then it's not moving the stock, there's probably a higher chance that people find this level a key level. If you're looking at the 5-minute chart and things just open and there is a candle that was hundreds or at least tens of times the volume that you saw in the pre-market, and it only happened in the first candle, well, that just means there's a lot of people that find the stock popular. But you can't use that as a confirmation of the trend.
We're gonna see that on the 19th, this stock went up to $10. That's important. But what's more important is that we see back on the 10th, this actually ran up to $6 and then it came all the way back down to $2. In this case, it downtrended all the way down to $2. Now, when it did that, there's still a lot of people that didn't get out in time. Now, most of them probably did, but we see how much volume was actually involved. And now we're assuming that there's at least 10%, maybe even 15% of people that are still stuck in those higher levels and they're waiting for things to come back. And so when this actually found some support and it went from 2 all the way up to 10, we were looking for our opportunity. And as a short bias trader, we see there's at least 3 days between the previous resistance and that individual resistance. When we look in the past, we see this is an overall downtrending chart. So we know it's due for a lot of momentum to come back into the chart. So this first bounce that we had, it had some movement behind it. When we look at the overall statistics for NASS, we have to understand this is a micro float. It's almost a low float. It's on the border. It's at 4 million float and the market cap is 20 million. It's very easy to manipulate a company at this size. So when you see jumps like this, you don't expect a stock to go back to 1 or back to 0. You have to remember, we're in NASDAQ, and in NASDAQ, the minimum for you to stay in this neighborhood is $1. And so when you have these small companies that are inside of NASDAQ, the closer they get to $1, the higher the chance that they're going to be pumped by someone, whether it's a parent company or some other third party, or they even hire a promoter. Well, we see what happened after a long time of downtrending. For a full year, this went to $1.50 and now it went up to $6. With that promotion going from 1 to 6, the end goal is not 6. The end goal is usually somewhere around 75% from the top. So if this went to 6, their actual goal was ending somewhere closer to 2 to make sure they stayed away from the 5. But what happens is at any point, a different variation can pop up. And that's where you have a 50% pullback to where this jumped around the $2.50, $3 area. Now, when that happened, we can use that previous day and we can use that area as a resistance. We have to understand this resistance is at 650. At the top of this point, that's the strongest point of this resistance. If that breaks in a significant way, momentum comes into the chart, it can easily go up to 6 if it breaks. But we don't know that at the moment. All we know is that this pulled back to $2.50 the day before. And then when it spiked up, it went up to $5. Now from $2.50 to $5, that's a 100% move. What we see on this day, there's almost a 100% move into a heavy resistance that happened 3 days before. Now we're hoping that the bag holders are there and they're going to bring the stock back down when you throw in the short sellers after a failed reclaim of that resistance. And that's how this works.
So what you have to understand is when we look at individual candles, what makes this important is when you want to track momentum. If you're looking at one individual candle, I usually recommend the 15-minute candle. That's the only one that's good for confirming momentum over the hour or even the whole day. But if you do it with the 5-minute chart or even a lower time frame, things can get messy. There's going to be a lot of false signals, and that won't do much for you. The reason we talked about technicals today, we're dealing in a market where it's subjective. Anything can happen, and it could be your fault or it could not be your fault. Most of the time, it's still your responsibility. So that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.